Wall Street spent years calling crypto a scam.
Bitcoin itself is a hyped up fraud.
You told me you owned all of the Bitcoin, and you offered it to me for $25. I wouldn't take it because what would I do with it?
Bitcoin, it just seems like a scam.
And now they are licensing the S&P 500 to a decentralized exchange. The company that owns the index tracking America's 500 largest companies, S&P Dow Jones Indices, just gave Hyperliquid permission to offer perpetual futures on it. Same organization that licenses it to the CME, except this time the license went to a crypto protocol. In that same week, Nasdaq got SEC approval to let you move your shares onto a blockchain. BlackRock started trading its tokenized treasury fund on Uniswap. Larry Fink said every stock, bond, and fund should be tokenized, and he compared where we are now to the internet in 1996. The institutions have arrived. Now, by the time that you're watching this, there's probably already been even more development. The question is, are they joining crypto or just using the tech while keeping all the old gatekeepers in place? So at first glance, it really looks like crypto adoption is happening. Wall Street is licensing their most important assets to crypto protocols, moving trillions onto blockchain rails, and talking about tokenizing everything.
I want the SEC to rapidly approve the tokenization of bonds and stocks.
The technology is clearly winning. Or is it? On March 18th, the S&P 500 became tradable on Hyperliquid as a perpetual contract after S&P Dow Jones Indices licensed it to a crypto protocol. First time ever. Before this, trading the S&P 500 meant opening a brokerage account and only trading during market hours. This contract trades 24/7, settles in stablecoins, offers up to 20x leverage, and no broker required. So now the heartbeat of the US economy is accessible around the clock on decentralized infrastructure. So this is what adoption was supposed to look like. But there is a catch. If you're in the United States, you can't access it. So the S&P 500 is running on permissionless infrastructure that requires permission to use. So, which is it? Adoption or just borrowing the technology?
A blockchain between us and the clients.
But that's the underlying technology.
But it's a private blockchain.
The same month, something bigger happened that answers this question. The SEC approved Nasdaq's proposal to let investors move their shares onto a blockchain. This is a pilot program, a 3-year test to see if it actually works at scale. When you buy stocks today, the DTCC holds them on your behalf. With this approval, you can select a tokenization option when you trade, and the shares get minted as tokens and sent to your wallet. This covers the Russell 1000, Apple, Nvidia, Microsoft, about 1,000 companies. Your brokerage stocks can now become as portable as your Bitcoin. So that sounds like they're joining crypto. Stocks moving to wallets, blockchain rails, self-custody enabled. But then you read the fine print. The DTCC keeps a root wallet with override powers. They can freeze your tokens, reverse transfers, or burn them. So your shares can sit in your wallet, but if the DTCC decides to reverse it, they can. And if you're hoping that's just Nasdaq being cautious with a pilot, well, it's not. BlackRock is using a similar model. Their tokenized treasury fund, BUIDL, holds treasury bills, pays daily yield, trades on Uniswap. I mean, it sounds like DeFi, right? Except you need $5 million to hold it. And full identity verification is also, of course, required. And the smart contract physically can't send tokens to your address unless Securitized pre-approves you. Now, BlackRock didn't just hire Securitized to run this. No, they led their funding round and also took a board seat. So they control the approval process. Now you might think, this is just Wall Street being Wall Street. Well, Aave, one of the largest decentralized lending protocols built by the crypto native side, launched the exact same structure. Aave Horizon launched last August for institutional real-world assets, and you can only deposit collateral if the issuer whitelists your wallet first. So the crypto side is building the same gates that Wall Street is, and there seems to be no alternative emerging. JP Morgan launched a deposit token, but it only moves between whitelisted institutional clients. Goldman Sachs built a private permission blockchain platform to tokenize bonds, but institutional access only. State Street launched a digital asset platform in January on public permission blockchains with on-chain compliance controls, but built for institutional clients. And the list goes on and on. Every institution building on blockchain is converging on the same model. Blockchain infrastructure, but with permission gates built in. So that brings us to the actual question. Where does this leave you? Two worlds are emerging. One where institutions operate, you get fast settlement and access to capital, but you need their approval and they can reverse your transactions. The other stays open. You don't need permission, but the institutional money isn't there. Right now, every institution putting capital on blockchain is choosing the first model. The permissionless protocols still work, but the question is whether they matter if the money isn't flowing through them. So the original idea was to cut out intermediaries, but what's actually being built right now looks more like giving those intermediaries better, faster technology. Now you'll hear arguments for why this makes sense. Regulators need somewhere to enforce compliance, which keeps them from shutting down everything else. Institutional capital brings legitimacy and liquidity to the whole space. But you'll also hear the opposite, that the entire point was infrastructure you could access without needing approval. That settlement speed is irrelevant if you're still asking permission. That when Larry Fink talks about democratizing access for billions of people, he's describing systems where every single one of them has to pass KYC first. Now, whether that's adoption or invasion depends on what you thought crypto was for. If it was about faster settlement, well then this is a success. If it was about financial infrastructure without gatekeepers, well then we're watching the original vision get absorbed. So, we're curious. Does Wall Street coming on-chain feel like adoption to you or something else?